Well, we don't know if the bottom is in. I would say historically it would be very unusual to have the pullback in the market that we saw and then a straight up recovery. If you look at 2008, 2009, you had two instances of very sizable pullbacks in the market and two bear market rallies, one of 12% and the other one of more than 20% before the market fell another 27% after that. And so as we look at it, we think the focus has been on the peaks in new cases. We're looking at second quarter GDP that's probably the worst that we have ever seen in history, anywhere from 30 to 60% if these mitigation measures stay in place for 45 to 90 days. We know that. We know it's going to be ugly on the way down. What's harder to model is the uncertainty around the human behavior on the other side of things. And we do look at examples like China, who is arguably 2 to 3 months ahead of our curve. We know that service demand there is still pretty lackluster. It's not a perfect example because they handled the situation quite differently. I think there's a certain amount of fear amongst the Chinese people that maybe we don't have here regarding a flare up again. But we think we're not quite out of the woods and that we have to be patient, be cautious. So we're still underweight equities at this point.
Okay, so underweight equities. Jim, you've got 8% cash, and that's the position you've had. You questioned yesterday as to whether you're going to be wrong about a test of the bottom. Where are you today with this move?
Well, I haven't bought anything, Scott. And, look, I want to be wrong. I want the market to go higher. I suspect that I'm not wrong. And here's what the tug of war is. You've got an incredible negative in this virus, which we just still don't know when we're coming out of this shutdown and what the recovery looks like. OK, that's the negative. We also have this positive, which is the fiscal stimulus and, by the way, the Fed. And, even if the current fiscal stimulus as it stands isn't enough, we're talking about another $250 billion. I mean, basically, we're printing money. All right. We're all modern monetary theorists right now. In the end, I think that wins out. So that's why I say a year from now, that fiscal stimulus wins out. But in the short run, I just think there is bad news that's yet to come in terms of what the impact on earnings for corporate America is. And we have no insight into it, none. So I'm not trying to talk the market down. I'm 92% invested. But that 8% that is cash, I'm hanging on to it. It's dear currency for me. And as we get into earnings season and maybe we have some air pockets, I'll be looking to put it to work.
All right. Sarat, what about you? Are you a buyer of stocks today, or are we going to retest the lows?
I don't know if we're going to retest the lows, Scott, but I do believe in, and I think everybody's been kind of referring to this, we are going to go through earnings season, one that we've never seen before. And, companies are not going to be talking about, here's my guidance for earnings. It's going to be, here's my guidance for revenue. And I think once investors see that, and you add to that the credit markets, which, still are not where we'd like them to be. And balance sheets are going to be really important going through the next couple of quarters, whether it's 1, 2, or 3 quarters, nobody knows. And kind of what I'm looking for are companies that will come through this with balance sheets that they can use or actually can depend on. And I think the opportunities ahead will be a little bit more. I don't think we retest the lows. If we do, it could be pretty short. But I think there are going to be more opportunities ahead. I'm not selling into this, but I'm kind of using this as an opportunity to see if I can get some more stocks for sale in the next few weeks.
John Najarian, what are you watching today?
Scott, yesterday was almost historic as far as the intraday move of the market, given that the volatility, we went from the high to the low, Scott, and a lot of people focused on the second half of the day saying, well, investors were nervous, they were selling. That's not what I was seeing. As you know, we track blocks of trades, and I'll say most retail investors that are watching your show, Scott, are trading somewhere between 100 shares and 2,000 shares. That's not what the institutions are doing. So the retail was take profits as we were up 300, 400, 500 points yesterday. That's when they were doing it. In the late afternoon, in particular, Scott, the final half hour, that was virtual algos and program trading. And you and I have talked about when they shut trading floors. And I guess I wasn't specific enough, Scott, but when we shut down trading floors, I'm not just talking about the CME, New York Stock Exchange, or Chicago Board Option Exchange. I'm talking about JP Morgan's desk. When you take all of those traders out of the mix at all of these trading firms, They're still in the market, Scott, but now they're at home on a phone, much like, Surratt right now. And it's not the same environment. There's not the same sharing of information, and it is a completely more volatile situation. So volatility.
So what's that mean? We gave up 900 points yesterday, John, in the Dow.
Yeah, we did. And we did it, Scott, because, again, there aren't those intermediaries there. Everybody steps back at once. And I think, Scott, when we get these trading floors as well as trading desks reopened, you're going to see this volatility compress dramatically. So that's my message to you, Scott. Yesterday, almost a historic move intraday, and those are the really big moves that are scary from a volatility standpoint. And yet, volatility traded in a range like this, we would see it shrink dramatically if indeed Dr. Fauci is right, and 2 weeks from now or 3 weeks from now, if we have floors as well as desks reopen. I am buying here, Scott. I think this is a great opportunity. And Dr. Fauci, if you're right, and if indeed you are, then we're going to recover nicely. Not V-shaped bottom, Scott, but certainly a recovery that holds.